Hello viewers, in this video let's learn the price action based trend following by backtesting a historical chart. Okay, so look at the picture. Always the stock price has three phases. One is uptrend, the next one is sideways, and the third one is downtrend. In uptrend, obviously the price goes up, and in sideways the price would be range bound, and in downtrend the price would go down. Okay, and when you are in uptrend, as you consider this point A to B, in uptrend the price won't go in a straight line. It always follows the zigzag pattern. So if you see the price starts from A, then it follows then it forms a higher high, and then a higher low, then higher high, higher low, then it reaches the point B. This is how the uptrend would be. In sideways, yeah, the price would be moving in the same range for a longer period. It could be days or years. And in also downtrend, whatever we are seeing in uptrend, that will be the reverse in downtrend. Price will continuously making a lower low with lower high in between. So this is how the structure of any trend would be. And in this video, we are going to backtest a stock which has a similar structure. So what is the stock we are going to do backtesting is Balaji Amines. And the stock selection for this backtesting is, the criteria is all-time high. All-time high means the price hasn't reached the price ever before. And the strategy we are going to use is price action. So the details of the strategy is, we would make an entry when there is a higher high breakout. As we see here in this image, we are seeing the higher high, right? So whenever the higher high breaks out, that is when the trend is initiating. So we would make an entry there. And pyramiding, it's optional step. Pyramiding means when you are completely confident of the structure of the stock, you can add more. Assume that you have already invested or 1 lakh in that. So if you believe the price is retraced and there is a good chance that it would go up, everything is a probability. We can't be sure anytime that the stock price is going to go up. But whenever this higher high happens and there is a retest of the previous high, then that's a good point to add some more money to ride the trend. So that step is called pyramiding. And the next step is stop loss, that is exiting the stock. So whenever the lower high breakdown happens, that is, here we are seeing the higher low, right? So whenever this gets broken down, definitely we have to exit the stock. So that is the exit criteria we are going to follow here. Okay, so entry is clear. Whenever there is a breakout or retest, we would enter. And pyramiding is an optional step. Whenever there is a retest, we can enter there. And exit is rock solid. When the lower high gets broken down, definitely we have to exit. So let's go to the chart. So I have opened the Balaji Amines chart. Okay, so here if you see the structure, our backtesting starts from the exact date we are starting is 13th August 2020. So the year is 2020. Okay, so if you see if I go to the weekly structure, you can see the last time it made the high was on January 2018. So that time the price was around 788.3, and after then the price crossed that area, that is the resistance. Now 778.3 is we can say the high is a resistance over there. So it never crossed that. So it has been two years. The price hasn't ever crossed this zone. So whenever the price crosses this area, the previous high, that we can consider as a breakout. That is, technically it is all-time high. So whenever we see any all-time high stocks, that is good for trend following strategy. And there are multiple trend following strategies available, but the best one without any noise would be price action. And also with the price action only, we can grab multi-bagger returns. So this is I would say price action is the best way to ride any trend. So let's see. So as I said, whenever the price crosses this point, the trend would be officially initiated. So it is like, if you see, the mild trend is already there in the stock. See, here it keeps on making low, and look at this point. Okay, here we can say that as double bottom breakout. Here if you look at this point, sorry, if I look at this point, let me mark it down. So here if you see, it is making a double bottom, and this is the previous swing high, like this point you are seeing here, right? This is the high, swing high. Now it has broken out the swing high that was on 22nd June. So that time itself the mild trend has started. So it is already having, like we can say, short term uptrend is already there, but there is a good chance it might take the resistance at the previous high and go back, like it might retrace or it might continue the downtrend. So nothing is guaranteed here, but the good point we can say is when it takes the all time high, then we can definitely say the trend has started, the trend has initiated, and that is a good time to ride, do trend following strategies. Okay, so again I'm going to daily chart, daily time frame. Okay, so I remove this. So this yellow line is the previous high. So let's proceed with the back test. Okay, so if you see here, 17th August 2020 is the first time the price has gone up. Previous resistance was 788 or something. This was the first time the price has surpassed this value. So we can say here the trend has started. Okay, the trend has initiated. And what would be the ideal stop loss for, so this is a breakout chart. So what would be the ideal stop loss for any breakout is previous swing low. If you want to ride the trend, then that is the correct way. You can use any indicators, but I would say none of the indicator, I just mark this in red. Okay, this is the swing low. None of the indicator would be accurate because all the indicators would be lagging, and sometimes it will make us come out of the trade yearly. That means we will get stopped out yearly. So if you want to ride the trend, the ideal stop loss would be swing low. But if you see the range here, if I mark, this is the low, and if you see, this is the current price. You see, it is 48%. So this is not at all affordable. So we can't keep this as stop loss, the swing low. So the next ideal stop loss would be, as it is a white candle. See, this candle is 15%. On when it broken out, it has moved 15%. So here, the ideal stop loss could be the swing low. Sorry, the candle low, the breakout candle low. So here we can take this also, because if you consider this as stop loss, let's see the range of that. So here, from here it would be 15%. Still it is high. So what we can do is we can do 50% of allocation here. Assume that your capital is 1 lakh. So you can start 50,000 here. Definitely this is a multi-year breakout. As we see, the previous high was in 2018. So there is a good chance that it will retrace to the breakout zone. So when it comes here, we can add furthermore, like as I said, if you add 50% here at breakout, remaining 50% can be added when it reaches the reaches the breakout zone. Okay, so if it reaches the breakout zone, let's see the risk we are going to take. So this is our stop loss, and here our risk would be 9%. So that would be ideal. Anything lesser than 10% would be ideal, or we have to do proper position sizing depending on our risk. Okay, so let's start with the back testing. So whenever high, so here it is like the red line always indicates the stop loss. Okay, and so this is our entry point. So I'm changing the color of this. So instead of yellow, I'm giving purple color, and the green, like we need to always track the higher high. For higher high, I'm giving yellow color. Okay, higher high is not at all a fixed value. We just need to follow what the chart makes. I will explain you in the process. Okay, let's proceed with this. So we are continuing. The next candle is here. So I'm just moving the higher high. That is the yellow line. I'm proceeding with the back test. Let me change the speed. It is 1x. Okay. So now another high is made. It is not at all a breakout. It just high is changing. So I have to move the yellow line. No change in the stop loss. Okay. And we are proceeding. So again, this is not a breakout. This is just a swing high. So we are proceeding. So it is like this is a swing high. Okay, now if you see in this candle, it has again touched the breakout zone. So this would be the ideal place to add 50% of quantity. Okay, so like again, so if we enter here, the risk would be lesser. Okay, still no change in the stop loss and no change in the swing high. So now the price is again, let me expand this so that it would be clearly visible. So, and the price is again making a movement, but it is almost range bound since it broken out. Okay, so price is almost coming near the stop loss, but we should not change our stop loss for any case. So whatever you are seeing here, these should not be considered as a swing low or swing high. So no change in our setup. The price keeps on. We adjust the. So here also it is not considered as breakout. Okay, so but we can consider this as a swing high only. So I'm just moving the yellow line there. And also if you see, it is forming a rounding bottom kind of structure. Let me draw that. So if I go here, I'm just picking the arc. So the price, it is kind of rounding bottom, I would say. Okay, but still now, till now there is no swing high breakout. So this one we can consider as a breakout. Okay, so now this is the breakout candle. So we can trial our stop loss. We can trial our stop loss, but not too much. Like so, ideally this should be the bottom of the whatever the rounding bottom, or we can move here. This is a swing low we can consider, but we should not be very aggressive in, because now the risk has reduced. That is what we should not try to lock the profit all the times, because it will end up stopping out from the trade too early. So let's be conservative. We are protecting the capital and we are just reducing the risk in this case. So, and the trend continues, and let's go ahead. So now I have to mark the swing high here. The yellow line would be here. So, and the price is going down, but no change in our setup. Okay, next breakout has happened here. So if you see, the high has to be moved here. Okay, because the higher high is a dynamic value until previously this is the higher high. After it reaches, when the price is going upwards, we don't know which is going to be higher high, but here the price retraces and then broken down. Now you can say this is the higher high for the previous swing. For this swing, the higher high is here. Now we can trial the stop loss. The stop loss is now moved here. That is the previous swing low. And let's continue. Okay, again I have to move this higher high here. So if you see the stop loss is too far, but this is how the trend following with price action would work. We should not dynamically change our stop loss, because one thing we can be sure is our risk is reduced. It is almost, the stop loss is near our buying price, so only that can be like taken, but we should not change the stop loss. So till now we are following the same structure. This is our higher high and this is the stop loss. So we are proceeding. Okay, here gap up breakdown has breakout has happened. Okay, now I can move the stop loss to this swing low. Okay, and we are proceeding. Our yellow line can be moved here, and we are proceeding. Now the yellow line can be moved here. Here there is a good chance the stock might come and fill the gap. So it is not ideal to change the stop loss to anywhere else. We have to just give space for the stock to move. So we are still keeping the same. Okay, here in this candle again the breakout has happened. So the yellow line I can move here. Okay, and this red line can be moved to the swing low, which is here. Okay, this is our setup now, and we are just proceeding. So price is coming down, but that shouldn't be a problem. This, because we have to respect our structure. This is the structure. We should not change the stop loss. Here again, the breakout has happened. In this candle, the breakout has happened, but now the other candle is there. So I'm moving the higher high here. Now the stop loss can be moved here. Now the stop loss is around 1500 and the price is around 2050. and we are proceeding. The price is coming down. Okay, so here again in this candle breakout has happened, so I am moving here, and the stop loss can be moved to the swing low, that is 1755. And if you see, this is a wide range candle. The candle itself has moved around 20%. So in this case I am moving the high here. If it's very wide range candle, so in this case we can move the stop loss to the bottom of the candle, that is the low of the candle. So it is around 2090 and the price is around 2500. Okay, this is enough space for the stock. Again the high has changed. I am moving here. So again breakout has happened here. So now we can move the stop loss here, that is 2300, and the high can be here. So again it can be moved here. There's a slight change in the high. Stop loss still remains the same. See, still we are following the same our structure. Our stop loss and high hasn't changed. Okay, this can't be considered as a breakout. This can be considered as a high. Okay, so again the high has changed. Okay, now here we can consider this as a breakout. So now the stop loss can be moved to the previous swing low. So high has changed, so I'm just moving the high here. Again I'm moving the high here. Okay, again here breakout has happened, so I'm moving the trailing stop loss here. So the high can be marked here. The stock keeps on making highs, so it is like the high is changed, but there is no change in the stop loss. So the high is here. If you see the structure now, it is around 1100 rupees stop loss is there, but this would happen in a trend following method. Okay, because the price is moving very steeply, and again it is making highs. So I'm just moving the high, but there is no change in the stop loss. So and the price, so this one can be considered as a, like here we can say there is a breakout. So when the breakout happens, now in this candle breakout has happened and the high is now here, so I'm just moving the high. The stop loss can also be moved here, the previous swing low. Okay, and the price keeps on making highs, so I am just moving the price, the yellow line there. So now the price is coming down, but there is no change in our structure. Okay, so this is the candle in which the breakdown is happening, because this is our swing low. So this is our exit rule. The breakdown has happened. So in this candle at this 3816 we would come out. So this is how we need to be disciplined. Whenever there is a breakdown happen, definitely we have to, because that is a change in structure. So we have to come out. It is not like we have to be emotionally sticking to the stock, as it has given good returns. There is no guarantee that it would give good return in future as well. So when the structure changes, we definitely have to come out of the stock. So if you see, if this is our exit point, let me put the range. So this is where we enter. So here if you see, this is the exit point. So approximately we can say it is a 382% returns. So this is how the trend following needs to be done, and with utmost discipline, because we should not be emotional. And if you miss to come out here during the breakdown, there is a good chance, like there is a history, because if you see many stocks which has given one time breakdown and the price would have been reduced by 500 to 600%. That might happen to any stock, even if it is any fundamentally good stock, that would happen. That is not in our hands, but we have to be disciplined with our stop loss. So this is our, the trade almost lasted for 1 year, because we initially took it is like a 1.5 years, because we initially took the entry around August 2020 and trade has lasted till 21st October 2021. Okay, so this is our exit point. Here the trend following is over in this stock. So we can again start the trend only if it breaks the all-time high, or if it has any other structure, that means the higher high needs to form and higher high needs to be broken out. Okay, so if let me play this stock, let's see what's the price of the stock now. So we don't need to worry. Even if the stock goes up, we should not worry, because we followed the trend and we came out with some returns. So that is what the expectation in a trend following strategy. So if you see, the previous swing low is not at all taken out till now. So this is the current price right now. It is 2,900. So it has been more than 12 months. The price hasn't taken out the old all-time high. So this is how it would happen when the price, in any stock, the trend may not last for a longer period of time. Because if there is an uptrend, as per this picture, if there is an uptrend, definitely there will be a distribution phase, or it would be, we can call this as sideways. So definitely it would happen. So this is how all the stocks would move. So for us, we have to make a disciplined decision of trend following. Only thing we can control is entry and trailing stop loss. Thank you.